Hello guys, I would like to present you a very nice company. The company's name is LVMH. This is a luxury brand company, a very high-end company which is dealing with wines, clothing, and all the luxury stuff that I would not buy personally. I don't want to spend on a t-shirt 1000 euro when I can buy a good t-shirt from 20 or or maximum for 50 euro. So 1000 euro for a t-shirt is nonsense, but this company providing such kind of uh, products for very rich people, and these people are ready to buy this stuff, and this kind of luxury companies can generate very good profits. So you can see this is the recent investment from Terry Smith. So he buys this luxury good company. The company is a Paris based company, and products, clothing, cosmetic, fashion, accessories, jewelry, perfume, spirit, watches, wine, all the luxury stuff. And LVMH is a very high quality company, and the market capitalization is also high in Europe. And you can buy it in a France stock exchange in euro, but also you can trade this company as a ADR in the US stock exchange. So you can see this kind of stuff. You can see this is a holding company with lot of luxury brands. So for example, the most famous is Louis Vuitton. And unfortunately, I my shoes, my t-shirts, and all my stuff is not Louis Vuitton, because I checked the prices and it's extremely expensive. But I prefer buy the company instead of the products. Maybe rich sportsmen and stars can buy this product, or persons for who is very much interested in this luxury industry. I even don't know most of the brands, but I'm sure this all stuff is very expensive. So you can see the fashion leather goods, a lot of wine and spirit like Hennessy. I I had Hennessy at home, yeah, but usually I don't spend so much on alcohol. I buy a normal wines for in a maximum price of 10 euro, and I'm pretty sure this stuff is more expensive. But I'm satisfied with low cost alcohol. The effect is the same actually. So other activities, selective retailing, and they have watches, jewelry, and also perfumes, cosmetics like Givenchy and lot of Christian Dior. I don't use this stuff, but I think most of you know these luxury brands. Let's see, the revenue is growing from 2011, almost doubled until today. And also the gross margin is pretty much constant, 60%, and operating margin is 20%, and earning per share is also almost doubled in the last 10 years. And company pays dividend, and it was 2011, it's around 2 euro, and now it's more than 9 euros. So the company enormously increased the dividend. And also the shares numbers, the company didn't buy back shares, but didn't issue new shares. So this is constant. And as you can see, the cash conversion rate is also very good. So they convert most of the EBIT to free cash. So this is a high quality company, high quality luxus company. And I made a very brief, interesting value calculation. If I calculate with 10 10% growth rate in the next 5 years and 5% from 5 to 10 years, discount rate 5% and terminal value 30, I end up around 600 US dollar intrinsic value, which is a little bit lower than the today's share price, which is 639 US dollar. But if I take an optimistic scenario with 50% growth rate and in the next 5 years, 10% growth rate in 5 to 10 years, and 5% discount rate, and with 44 terminal multiples, then you can double the money. If it's in a negative, in a pessimistic scenario, 5% growth rate in the next 10 years, discount rate 5%, and if we end up with a low terminal multiple with 15, you can lose half of your money. But if I put in a probabilistic perspective, normal scenario 50% chance, best case scenario 30, and worst case 20%, then we will end up a little bit higher share price than today. So we even have some margin of safety around 70 US dollar. You can see the share price in the next 5 years increased dramatically, so almost 10 times the share price as it was 5 years ago. But also the company acquired several new brands and the company is increasing the profitability. So you can say the companies might be a little bit expensive, but the quality of the company is unquestionable. So Terry Smith says quality will outperform and it is worth paying up for. So the value of the quality fundsmith approach has instead been to invest in quality companies with high return on invested capital, strong margin, good cash conversion, and defensive business models. Smith noted that as far back as 2012, there were strong views being voiced that these sort of stocks were expensive and due for a reversion to the mean. And this mean reversion didn't happen for this high quality stock. And I expect it will not happen, but we don't know what the future holds for us and for the stock market. If you had followed that advice, you would have impoverished yourself, Terry Smith said. That is not to say there won't come such a day. The problem is that in this current bifurcation, it is easy to get scared by the valuation of quality stock. However, he pointed out that it is important to appreciate that high PM multiples do not necessarily lead to poor future outcome. And definitely, this is this LVMH company. This is a luxury product company with great brands, high quality business, and the PE ratio is a little bit high. But I think this company will remain a high quality company. And if you invest in a long term, 10, 20 years, and you might invest in this company if there is a pullback in the share price. I also invested some a small amount of this in this company, and if there is a drop in the share price, I will add to the number of shares I invested. So I followed the advice of Terry Smith and I invested in LVMH, and also my analysis confirms that this is a good company and the valuation is reasonable. Thank you very much for listening and I wish you a nice day.